Good morning, everyone. Apologies for a short delay due to some technical problems. Welcome to Windsor Brokers live daily market outlook for Friday, 7th of September 2012. A lot of action seen from yesterday as expected, of course, as the euro had a bumpy ride following ECB's decisions, despite some comments that leak of the data of the release that was seen on Thursday was already priced in the euro's action. Quite surprisingly, the release of interest rate data that showed that the ECB kept rates at 0.75, despite some quite big expectations of possible further cuts, and not firm confirmation from Draghi of bond buying. Okay, he mentioned, but to something to be done in the near future, not as an immediate action, pushed the single currency sharply down. Yesterday's range was around 100 pips within 1 or 2 hours movements, but the single currency is back to strength, and after a consolidation during the Asian session this morning, we have a fresh action and posting a fresh highs as single currency goes above yesterday's high at 126.50. Similar situation with the sterling that is currently at around 59.60 level, aiming towards 160 after breaking above congestion around the 59 zone, with dollar yen on yesterday's sharp move higher, averting immediate downside risk towards 78 base, and now testing 79 barrier as our breakpoint target for a possible further extension higher and escape from the dangerous zone. The dollar Swiss is still aligned slightly towards the downside, as upside remains capped at 96, and more focus seen towards the downside. More of this, of course, we're going to see in our technical part. Just to mention that crude oil eased significantly from yesterday's high at 97.64, dipping as low as 94.53. Awaiting today's U.S. data, non-farm payrolls. That is one of the key releases of the week. The release that is forecasted at quite disappointing level at 121,000 compared to 163,000 in the previous month. Release is now under question, as yesterday's ADP private sector jobs data came in unexpectedly high levels, and much better than expected. The release was at 201,000 compared to, I'm not sure, basically we can see it, ADP came at now it's going to take some time to find it. Oh, pardon. We are looking. ADP came at 201 compared to 141. That could be quite good support, quite good positive signal, as also yesterday's ISM data they released at ISM non-manufacturing PMI that was released expected at 52.6, came at surprisingly higher 53.7. That is another quite good signal. Anyway, the main focus is now on U.S. non-farm payrolls that are due at 12:30 today. Let's take a look, since we are here to see today's calendar and the releases that are due. The German trade balance already released at 6 o'clock GMT for August. Shows the widening of the trade surplus to 16.1 billion euros compared to 15.4 narrowing forecast, and the 16.2 billion of release of July. At 6:45 we have that has already been released. We're going to take a look if we have the update on this from trade balance from France. It's going to take just a few seconds. Minus 4.3, the gap slightly narrowed from forecasted minus 5.7 billion francs and euros, pardon, and the minus 6 billion trade gap from month of July. The Swiss foreign currency reserves increased to 418.4 billion Swiss francs compared to 408.6 billion in month of July. And then series of data from UK, quite significant. 8:30 GMT, manufacturing production is expected to improve by 2.10% compared to a negative -2.9 release of month of July, while also the industrial production is forecasted today at 1.7% versus negative -2.5 in July. So improvement in the industrial production in UK, with the PPI input for August 1.6, better than the previous release at 1.3, and the output also 0.3 from 0. So quite positive expectations are seen today from UK. German industrial production is due at 10 o'clock GMT. Also forecast is positive, plus 0.1% compared to minus 0.9% of release of July. And then, of course, series of data from Americas. First, Canada, building permits for August, improvement still in the negative territory, minus 1.5 compared to minus 2.5. Unemployment rate in Canada is expected to stay unchanged at 7.3, while labor productivity is forecasted to tick slightly higher. 0.2% is today's consensus compared to 0.1 of the second quarter. And of course, the top releases of the day, US non-farm payrolls for August. 121 is still forecast compared to 163,000 in a month of July, and the unemployment rate is expected to stay unchanged at 8.3. But bear in your mind that positive releases yesterday, ADP is one of the signals for release of the non-farm payrolls data. Might be signaled for some more positive release today, and of course market action that will follow is widely expected in any case. From a calendar, that was, I think, all for today. We're going to take a look now at the currencies, as we have a lot of action basically this morning, and see what we should expect during the day, and what are the forecasts for Friday as the last day of the week, when we usually have a lot of action in the markets. Starting with the euro. Okay, the hourly chart shows the positive trend, as all studies are aiming higher, and the single currency after yesterday's choppy trading and moving down from a 126.50 that was yesterday's high, seen on the release of interest rate data, then pushed back by quite soft comments from Mario Draghi. They dipped as low as 125.58, but quickly regained the strength and basically maintaining its positive, larger picture tone that is still unobstructed. It's 5 weeks, rally from 16th of the latest upleg from 16th of August 2012, low at 122.54, and of course the larger approximately 6-7 weeks rally from 25th of July, low at 120.52. That stays intact for now. Back to the hourly chart, the fresh rally this morning has so far reached 126.68, moving steadily towards our upside target at 127.00. Significant was break above previous highs at 126.36, and yesterday's one at 126.50. That now basically opens way towards 127.00. RSI is now approaching the overbought territory, though the other studies still show enough room towards the upside. We might see some pause in the action due to overbought conditions, but larger picture studies are still showing much more room towards the upside, and the potential for test of 127 is quite high at this point. Of course, the release of today's NFP data will give us some more clues whether it's going to be as expected in the negative tone, or something more positive that will give opposite. Basically, will push the things in the opposite direction. From the The other majors, British pound, approximately similar situation. Brief consolidation followed around 159 zone, as yesterday's rally peaked 159.41. That was the high of yesterday, and then a brief consolidation seen in the late afternoon and the Asian hours, with fresh action higher now seen in at the beginning of European session. 159.58 seen so far. A positive structure on hourly studies, on hourly chart. Again, lower time frames are hitting quickly the overbought territory, while the 4 hour, also in the 4 hour, we are approaching, might be signal for some corrective action, yet no any signal for a reversal generated. On the daily, positive rally from 152.67 1st of June low, so we're talking about 3 months and something. Rally is still in play, and after break above significant 159 level, that also marks 61.8% retracement of the larger 163.00 to 152.67 down move. Now sees a good chance for a extension towards next target and a strong psychological barrier at 160.00. The daily upside, 30 days Bollinger Band is currently offering resistance, currently standing at 159.76, but according to the studies, as we have a series of golden crosses, as 20 days moving average here crossed above 200 days one, seeing a potential for further extension higher. Quite positive outlook seen on the larger time frame for the sterling. Back to the lower time frames, immediate support now stands at 159.33, yesterday's high, and 159.11 along with 159.00. I would say the risk would be seen on the loss of 158.80 and a more significant 158.40 trendline support that would question the near-term bulls and possibly look for a stronger correction. For now, the strong rally is intact, and we are looking for a test of 160.00. Just not to forget that overbought conditions that are the studies that are approaching overbought conditions might signal some corrective action in the near term. The dollar yen was the top performer yesterday, as a strong bounce on on US ADP data. They pushed the dollar significantly higher against the Japanese currency, and it's better seen on the 4-hour chart. Our initial target that we kept mentioning in past few sessions, 78.80 as the previous consolidation range top, has been cleared. Also 79 level seen as the next one, briefly dented 79.03 touched so far, with 61.8% retracement at 79.08. Retracement of the down move from 79.65 to 78.17 is now our key barrier on the upside, along with the Ichimoku daily Ichimoku cloud top that is at 79.13. And basically, if we see the clear break above these levels, then the way will be open towards 79.65. Quite positive, but overextended tone and overextended studies on the hourly chart are already triggered current consolidation here, with some further corrective action not ruled out, as also the 4-hour indicators are entering overbought territory. At this point, 78.80 previous resistance now is acting as initial support ahead of bullish moving averages crossover at 78.60, where ideally above this level any deeper dip should be contained in order to maintain the near-term positive structure and the open way for a further extension higher. Otherwise, loss of 78.60.50, I would say, would again revive bulls and then focus towards 78.30, 78.20 base. And the dollar Swiss, basically hourly chart still shows a range, but it's slightly skewed towards the downside as the pair is moving within the narrowing range, with upside being capped at 96.06 levels. These were the latest upside rejections. while downside ascending highs of 95.00, slightly higher highs 95.07 and 95.17 are signaling the narrowing range from the downside. Basically, the first barrier 95.77 is now under attack. It's the trend line resistance, but we need to see the break above 96 and the 96.15 in order to avert immediate pardon, downside risk, and look for test of the next barriers 96.34 and the main bear trend line of 99.70, currently standing at 96.21. So basically break above 96.30 is to provide relief and allow for some stronger bounce of the pair. However, the 20 days moving average is now crossed already 55 days one and crossing below 90 days one. That keeps additional pressure with the daily studies well in the negative territory, seeing much more potential towards the downside as failure to clear this important resistance zone at 96.30 might risk lower top and the extension of the short-term down move from 99.70 and the loss of 95 base to open 94.61, 94.20 and the very significant 94.00 Fibonacci level reinforced by 200 days moving average. Crude oil is, according to the 4-hour chart, I would say in the range trade, downside limited at approximately 94, while upside stays capped at 97.60 zone. Still no direction following a pullback of 98.26. Reversal that was contained at 38.2%, exactly at 93.94. At this point, not much to say. The near-term price action needs to see break of either side in order to define the fresh direction. With the daily studies started to pointing lower as 2 false breaks of the 200 days, even 3 false breaks of 200 days moving averages, see additional pressure on the price action, and they see currently more potential towards the downside as studies are now in the descending mode, with the loss of momentum seeing more risk towards the downside, and test of 94.00 as our initial support ahead of previous high at 93.22. Basically, if we see the break of minimum 96.63, where is currently 200 days moving average, that will avert immediate downside risk, but clearance of the previous highs at 97.35 and 97.64 is required to confirm, and the 10 focus towards 98 and the 98.27 recent high in order to resume the larger uptrend from a 77.27 low of 28th of June 2012. Current movements are seen as consolidation, congestion between this approximately 300 pips is seen as congestion, but we need to see break above 200 days moving average minimum in order to get some more positive signals for possible extension. Break above as set levels 97.35, 97.64 and the more significant 98.26 is to open our key barrier and key target on the upside, $100 per barrel, while said loss of 94.00 and the 93.20 would allow for some stronger corrective action. And the yellow metal, let's see how it is. It holds still positive tone, but current yesterday's break above 1700 that resulted in a rally to 1713. That was the high of yesterday. Has seen the corrective action on overbought conditions on the 4-hour chart, with the studies are now in descending mode. Immediate support at 1687. This is the previous consolidation range. Floor is still holding the downside, 1688 seen so far, with the 20 days moving average now moving sideways on the 4-hour chart, attempting to contain this corrective action, and ideally reversal from here is seen as good base for a further extension higher as the overall positive tone maintains the overall positive structure maintains a positive tone, and looking for a further extension higher. Daily chart shows this, although the overextended conditions and RSI already started to point lower from its overbought zone, could be a signal for some more significant corrective action, with the good support seen at 1676 previous high, and the broken trendline support currently at trendline resistance now reverted to support currently at 1664. And of course the key short-term support lies at 1650-40 zone, higher low of 31st of August, as well as a 200 days moving average. And if we see the break here, then all this rally above that resulted in a break above 1700 could be seen as false. But for now, the positive structure, despite some overbought conditions, sees more potential towards the upside, as clearance of 1713 opens 1716 and 1725 our next upside targets. And as said, it's important that any stronger dip should stay contained at or above 1670 level in order to keep the short-term positive structure. Your questions and answers now, please. Your questions now and my answers, please, now as we finished our today's presentation. Okay, we have the Aussie dollar question. Let's just take a look. A recent bounce, according to the Ichimoku studies, from 101.66 low 5th of September, is now attempting through important barrier. It's the upper boundary of the Ichimoku cloud, currently at approximately 103.30 with 103.43 seen so far. Looking to break of this level basically is required to. This is also close to 200 days moving average, so quite a strong barrier at this point. Break of which would give us some more positive outlook for the near term, as the recent reversal of 106.12 that retraced over 38.2% of initial 95.79 to 106.12 rally has been contained by 90 days moving average on the daily chart, with some positive signals seen on a break above 200 days moving average and the Ichimoku cloud top that will allow for a stronger bounce and stronger recovery, as the pair remains in the uptrend of 95.79, and the latest move is so far seen as corrective, as previous low. It's also at 101.75 approximately there, along with 90 days moving average contained the dip so far. As said, break above this critical points required to open way for a stronger recovery, with 104 level previous strong support now reverted to resistance, seen as the next target. Our structure is positive, but quite overextended conditions see potential of some corrective action. The pair is just approaching 103.53 31st of August high, and the initial resistance 103.43 seen so far, yet no any signal of reversal, clear signal of reversal seen on the hourly chart. 4 hour conditions are pointing higher, as the MACD is breaking above its midline, and recent break above 55 days exponential moving average at 103 zone opens way and sees room for a further extension higher. At this point, I would say near-term action sees good potential for a further stretch and further corrective action towards the upside, as next levels to watch in case of a break above our initial levels seen at 103 and 90, so 104 as said. This is also equivalent to 50% retracement, and break of which basically is to confirm the recovery underway, and the higher low at 101.66. Any further question, please? Okay, if no questions for today, then we are going to conclude our Friday's session. Just bear in your mind what we said, that a lot of releases are seen today, of course, with the key one, U.S. non-farm payrolls are the focus, today's focus. I wish you a nice day and very successful and profitable trading, and expect to see you back on Monday at our standard time, 7 o'clock GMT, 10 o'clock local Cyprus time. Good luck.